Hello and welcome to Wyckoff Training Academy. Sorry for the delay in uploading this video. Actually, 1 second. Let me get rid of these things. 2003, 2204. This video has been recorded for the people who might be opting because I've closed down all the like uh, sale of one-time purchase. So here from here onwards, I'll be providing indicators on monthly subscription of $35. The reason for coming up with that thing is because many people, I want most of the traders to gain access to these indicators and make a what you can say informed decision or take an informed decision based on Wyckoff price and volume studies. So unlike any other many indicators of mine like version 155, 164 and other things, what I've done is like I've issued a free trial of 1 week on for this particular tools like version 198 to 202. So and so and I'm going to add 196 into it as well. This is a vibe of minor accumulation and distribution. And like once you opt for the monthly subscription, you can take access of indicators that you want to use in your trading. So the reason I have I've kept 200 and 201 is like because many of my older students have bought this indicator under one-time purchase thing. So just to have give you an insight into how this thing works, and without any further ado, let's dive into the indicators. So now many of my students they had and many of the traders who are using this thing or who has taken the trial, how to use this thing. It is very simple and straightforward approach. The reason for coming up with the key zones, which comes up in like now 98 or 202 version. If, for example, I'll start from bottom. Price oscillator means if prices are going to go up, it will you will get the oscillator color as green. If prices are going to go down, the oscillator color would be red. So green stands for prices are going to go upwards. Red stands for prices are going to go downwards. What about volume oscillator? Volume oscillator means whenever there is a green color, that means there is volume participation or volume activity is there. Many people some of the students have messaged me stating that it is a momentum. It's not momentum. This is not a momentum oscillator. This is like you can say uh, I worked with David Weiss Wave, and in the course of exploring the indicator in detail, what I thought is like to have a solution wherein we can have an oscillator form of indicator wherein we can see if prices are coming down, if there is volume with the price, if prices are going upwards and there is volume with the price, if again coming down and going upwards and volume is there, active participation of volume is there, then we can see the only portion where there is high, or you can say volume contribution, or you can say high volume activity. It's not momentum. You can relate it to momentum like there is high momentum and low momentum. There is no high or low momentum according to my experience. What is it is it is simply there is volume behind this price action move. If there is no volume, then or there is less volume, it would indicate in red color. The yellow color signifies there is a change in like from green to red and red to green. Simple and straightforward. And if there is no whatsoever kind of volume, either upwards or downward, it will print in the form of yellow color. So this is simple. It is quite simple. There is nothing. So now, many students they will have a doubt that like we are seeing the green color, but price is coming down. Here also we can see the green color. Here the oscillator price oscillator is turning red. Price oscillator is turning red because the prices are coming dodown. Volume, if there is a volume incorporated, with the or there is a high volume or volume behind bringing the market downwards, then this would be green and this would be red. And if there is a high price rise, and this would be green. And if there is price rise with volume, then this would be green. Like you can see here, it is green, but here it is red. That means there is low volume activity over here, but still the prices are about to go upwards, and that is the reason we are seeing this kind of higher move. So it is simple. This is how version 200 and 201 will work. So like I minimize this thing so that we can concentrate on 196, 198, and 202 version. So this, what was the reason for making this price and volume zone or price volume dynamic two indicators? Many people are trading on SMC, ICT concepts and other things and whatnot. So they work on, like for example, one of our trader, he told me about rally base, rally base, rally base, and same thing works for when rally base uh, fall and a fall, base and fall and base and fall, and then again it will keep on. So this is depicting a downtrend move, and this is depicting uptrend move. So now many people are using SMC and other things. So many students, especially one student, he told me, "Sir, do we have a solution for it?" So as I'm trading based on Wyckoff, and I only trade based on the volume and price analysis, nothing else apart from that. No RSI, no MACD, no moving average convergence, divergence, nothing like that. So, do you have a solution for it? So, on with that those line, I have come up with the solution wherein there would be a key zone which would be formed over here. Like for example, you can see it over here. Now, the only thing which you have to do is, like for example, if I uh, minimize this thing, you would see on 198 version, you would see how what are the trade setup, what kind of trade setup to look out for. There are two kind of things. One is this pink line and key zone, and another thing is liquidity hand, like over here, liquidity hand. So how to trade based on it? It is simple. Look for first pullback. Your long stop, your short stop is clearly mentioned over here. This is how you have to trade. And in trade setup two, that is liquidity hand. You have to trade based on first pullback, and last swing low would be your stop loss. Now, now here comes the target booking and how to book the targets and all, and how to book the profits. So now, for example, if you're trading on a trail, you can say liquidity hand, this is a breakout. If there is a clear-cut touch, or if there is a price violation, one of my student is asking for whether we would consider a perfect touch, or whether we would consider this to be a pullback, or either ways there are multiple candles, or we should consider a single candle, or we should consider a wick of a candle. So to that student, I would like to say is like, I love this kind of scenario. And in this scenario, I want to see a single candle, and then if there is a demand candle based on my version 155, then I would love to enter over here with a stop. But many a times you see this kind of pullbacks. This is also a pullback in a sense, but I like this pullback. So there are, like for example, I'll not get into detail. I'll not get into this kind of things, but there is subjectivity to trading. It cannot be a linear kind of or a rational like it is linear in some degree. It is rational and logical, but things like, for example, 1 plus 1 is equal to 2. It will not happen with trading because it is subjectivity. Based on situation, you have to do the assessment, because liquidity hunt is something wherein there is a price level which is bound to be tested before going upwards or before going downwards. This is what a liquidity hunt normally is referred to as, or I refer to it as. For other people, it is something where is a stop loss hunt. So either you can call it as a stop loss hunt, or either I would call this as a area of interest wherein price will touch or price will revolve around, and either ways it will go downwards or either ways it will go upwards. So this is what a liquidity hunt price level is. And after that, we can see there is a pullback, either this one or this one or this one. This was a liquidity hunt, put a pullback, and where to exit. You are seeing two green, like volume dynamic, volume. These are the green lines, or uh, as we are depicted in the form of a normal plot. So, which is normally can be compared as a moving average or other things. So, this would give you a trailing stop loss. Either you can trail according to this bottom line, or either you can trail according to the line which is closer to price. So, and once you are into a trade, price keeps on going till the time it is not breaching this level. You can stay back in the trade, and then once it breaches, then you have to look out for the new opportunity if you're trading based on liquidity. And if not, then you're looking trading based on price and volume zone. So price and volume zone, once the price and volume zone are formed, we either ways we would either look for a breakdown opportunity, test of a breakdown, or test of a breakout. This is the zone. This is nothing. It has nothing to do with rally, base rally, or drop or base rally, or whatever you call it. No, whatever the normally people call it or define it as. This is a price area which has high probability of either a price going upwards or a price going downwards after testing this area. So what we are doing, we are only trading based on testing. Then the greater the test, the higher the probability of price going upwards. So we are buying here, this would be your stop loss. If you are selling over here, this would be your stop loss. And same when it comes to profit booking, or what you can say, the trailing stop loss. You can be in the trade as long as it doesn't breaches this particular either top line or the bottom line. So this is simple and straightforward. Now, in we have this support resistance drawn for people who are struggling with swing highs and swing lows. You can see dotted lines, dotted blue lines. This line, this is supported resistance line, and once and after key zone, you see uh, this is something very very important. On this key zone, you see two lines. These are the major lines wherein, these are the price area wherein price has high probability of testing around. Unlike liquidity hunt, this has high probability of testing. Like for example, we got a price rejection as we have broken out of this thing. Price came back, tested this level, and it started. And again, you can see we are, if you see closely, if you watch closely over here, if I extend the line over here, you can see price is broken out, tested, and then continued its upward journey. Then again, we got at this level. This is a high level above the key zone and level below the key zone. So price, as it was uh, like it was heading in upward direction, it came back, it tested this line, and then it moved upwards. So now, after explaining these two indicators, you have 196 version. 196 version is something wherein which is a minor accumulation and distribution, giving area providing a price providing indicator, which gives you a accumulation and distribution price levels. And there, if we get a trade opportunity on the breakdown or on the breakout of this one, we trade the first pullback. All my strategies are first pullback strategies. So, though my accumulation distribution course incorporates trading spring and upthrust, that is different part. But when it comes to this particular um, indicators, which I'm about to like which I've already released for monthly subscription. So the reason for the doing for this particular indicators is to simplify your trading. Trade only either you can, like for example, we have a level, we have a up move, then we came back. We have minor test over here. This is the first pullback because this is a swing. This is the swing, and it is coming back. If this is like, and I haven't included 155 version over in this particular indicator because many people are finding it very useful. Some people are finding it very difficult for entry. So because sometimes you get a demand candle over here, and what about why shouldn't I buy here? So that question arises in the head of the trader. So if you find it comfortable to trade based on 155, because many a times it will give you less comparative signals, less comparative entries with low risk potential, and the number of trades would be less. So if you're facing that thing, then you can skip 155 version and use your own entry and exit trigger candle, but I normally use 155 version as enter and exit candle. So this is how you have to trade. Like for example, here we got an opportunity. This is a normal support resistance indicator, which has been incorporated into one two not two, so that you can make use of it. And here you can see this is fuchsia means pink color means we are going to see accumulation. This is the price accumulation area, price level, and green means distribution, price distribution area. So every time we see this kind of levels, you can see if we move back, and all the indicators are non-real-time. As by now, the people who are using it, they can see. Like if I use only 165 accumulation and distribution, everything is green. First pullback. This is my first target. This is my second target, and then or either I'm out over here. So this gives me a good points, uh, especially in gold, and it works on any instrument. Either you trade gold, either you trade Euro USD, either you trade JBP instrument, irrespective of things. Like for example, over here you can see. So many people who are using this thing can make if you I normally trade XAUUSD, so I'm not used to familiar with Euro USD. But if you have any problems or concerns Euro USD, feel free to ask, and I'll on this one. Because like for example over here, we got a distribution, price distribution, and a pullback at this particular point. But first pullback was here, I guess. One second, let me pull it back. No, this is not the first pullback. Oh, this is the first pullback after the breakdown. Breakdown first pullback. We got a selling opportunity. Price went downwards. Again, price is testing this level, but could not go beyond this or could not breach this level and give us a breakout from this particular level. So this gives us low risk, high rewarding trades. Whenever you're getting an opportunity, you can short sell it. This would be your stop loss. Then wait for the opportunity. They wait for the respective uh, uh, like opposite highs or lows for the target, or either book the profit when the price breaks back or touches this particular lines in ribbon and line. So this ribbon and line, what is the purpose of this one? These are the dynamic trend lines, because static trend lines are something which is very different, and this is dynamic trend line which keeps on evolving based on the price movement. So this helps us in staying back into the trade. Like for example, we got an opportunity over here. We got an opportunity over here. This was pullback, then again a pullback. Either you would have got entry over here, or either if you're planning based on your entry, uh, one second. If you're planning to trade based on your trigger candle uh, identification, then you would have traded over here. But this is a very difficult scenario to trade, whereas this is also a very difficult scenario to trade. Having said that, I'll in my coming sessions, I would explain in detail. But just to complete on, just to have a say on this one, because this is a completely trend exhaustion point, and normally distribution and accumulation occurs at the edges. Like so, if you're buying over here, you're taking a chance with a stop over here for this much of gain. So this is the place to place your bet, because here everything is showing you selling, selling, selling. And then if you're planning to buy based on, because this is an accumulation and this is a distribution taking place. So if distribution is taking place, price is not going above. So it is better for us to take a trade closer to this level, so that if we there is this is it gives us an opportunity wherein there is little to lose and more to gain. And same goes over here, little to lose and more to gain. If I look over here, like for example, just for sake of this particular session, mm, if this one is long, like any candle would be mine. This is the first pullback. Like for example, I'm considering two trades. Huh? First one stopped out by this candle. See, it is 1:2. Like if I'm just marking this much point. This was the risk to reward. I don't like. It is very difficult for a trader to hold on or hold back till this particular point. But over a period of time, when you're using your trustworthy system, you know your system very well. Then definitely you would be in a position to initiate us. Like, this is not the first pullback I did. And this is my stop, and price went till this particular 9 and 5.25, almost 9.5, 9.5. So in these two trades in Euro USD, I got 1:9.25. So this is one tool, one system which would, it is very unique. I'm only going to issue this license to very few people, because I don't want to make it this is not something where like I'm into a marketplace promoting things. I'm just here to give best possible trading opportunities, trading indicators to fewer people, so that they can make consistent money, provided that they know how to trade in financial market. So thanks a lot for watching the video. And if anybody wants the paid subscription, they can go for it. I have only fewer licenses left with me, and enjoy trading. Thanks a lot. Thank you for watching the video.